record on the computer. All right, and then you already know I gotta go over here and make sure the technology is working appropriately. We're looking good on the setup over here. We're looking good, looking good. All right, so we'll read this disclaimer slash disclosure, then we'll jump into today's trading recap. So, please note that the following is not legal or financial advice and is provided for informational and educational purposes only. Investing in securities carries a high degree of risk and can result in the loss of your entire investment. You should consult with a qualified financial advisor or legal professional before making any investment decisions. The information contained in this presentation does not constitute an offer or solicitation to buy or sell any securities or other financial instruments. Any opinions expressed in this presentation are subject to change without notice and should not be relied upon as a recommendation to buy or sell any securities. Please do your own due diligence and research before making any investment decisions. All right, so now that we're tapped in, what's up, J Baby 210, Alberto 33529, Orlando Jimenez, B Morris 80, Noah Stewart. Thank y'all for coming through. You just took care of that disclaimer, and now let's get into what was the trade of the day. So if you're new to my TikTok lives are geared towards beginning options traders and to a degree beginner traders because a lot of the fundamentals of trading you can expand them across different arenas or different types of securities, right? So whether you're a futures trader, commodities trader, stocks, options, so on and so forth, forex, the base level for the most part when you're looking at candlesticks, supply and demand is the about the same. But for me, I'm all about the beginner options trader. So today, and I always have to give this heads up that if you're looking at timestamps on my live or on my computer, on my screen that I'm sharing with y'all, if you're looking at timestamps, just remember I'm in the West Coast. I'm in California. So I am 3 hours ahead. So for me, the market opens up at 6:30 a.m. and it closes at 1 o'clock p.m. So with that being said, out here in California at 7:02 a.m. this morning, I'll let the Discord community know that I was getting into QQQ puts. Now, this was more of an on the spot trade. Even though it lined up with my setup, I just want to bring the chart over because normally I really pride myself on having the chart already put in the Discord and then getting into the trade. But this was on the spot, so I didn't really have time to chart it. And I think it was Jay something that just gave me a follow. I didn't quite see your username, my guy, but thank you for that follow. So Q my Dukes, we got a celebrity in the live. We got a celebrity in the building. Big shout out to Q my Dukes. Thank you for the likes. But like I said, right here, as we can see, I got into QQQ puts at 7:02. This was about 30 minutes after the market opened. And so if you are new to my live, I like to trade on the 30-minute time frame. I consider myself a scalper. Now, I was talking to somebody the other day, the homie, and he was saying that it's so crazy because usually when he tells people he's a scalper, it usually gives some less than desirable reactions, right? People look at scalpers with almost like a negative connotation. But all forms of trading, as long as you do your homework, as long as you put in the time, the charting, and your discipline, you can make money from all forms of trading, whether you're a scalper, a day trader, swing trader, whatever the case may be. But let's go ahead and slide over to QQQ. And I want to show y'all what I was looking at today. Artie, thank you for sharing the live. Bro, no, hey, but how does this chart even work? Fiends for motion. All right, so we've kind of switched around. We haven't really even got in the chart yet. We haven't even looked at the chart. But right now, we're looking at the 30-minute chart for QQQ. So if you're new to trading, each one of these candlesticks represents 30 minutes of time. Now, I'm going to turn off the Strat Assistant. In my last live, we got a little bit of feedback about the Strat. Now, I always keep the Strat Assistant or the Strat Indicator on because that was like the first stepping stone that I had when it comes to learning to trade. I don't use the Strat anymore, but I like to leave it on to pay homage to Rob Smith, the one who created the Strat, and Sarah Strat Sniper, the one who created the 50% indicator. But essentially, this is what we're looking at on the 30-minute chart today with QQQ. And I said I was getting into puts. So what we had here on this first 30-minute candle was a very bearish candle that broke below the pre-market low. And once it closed below that pre-market low, that to me is basically an opening range breakout. So I took that as a bearish momentum or bearish sentiment for the day. And I went ahead and got into puts. I was in and out within like 3 to 5 minutes. I hit my 5-10% profit target and went ahead and got out. But if you guys have been on my live before, you know that I'm a very conservative trader. You know that I could have stayed in those puts and let them run down a little bit more, especially throughout the day to get more profits. But it's better to take profits when you see them than risk getting a little bit greedy and then seeing a green trade go negative. Now, if we were to zoom out a little bit more, because like I said, I really didn't get a chance to chart this the way that I like, but this is how QQQ is looking, right? So we've started somewhat, even though we had a little bit of consolidation over here, we started this somewhat of a downtrend, right? The market is kind of pulling back, even though we've gapped down in a major way, which is and was another indication for me to want to take puts, right? I've learned lately that gaps are starting to be an area where price does not want to operate, right? So we all know the gap fill strategy that eventually price wants to gravitate back to where that gap is and fill it. But in the immediate future, what I've learned is that once a gap forms, if it doesn't close within an hour, that generally indicates an area where price doesn't want to be. So after that first 30 minutes, especially going overnight, we've got this gap here. It kind of told me that we were going to have a bearish day. We saw the opening range break out to the downside, which was another confirmation to go ahead and get in puts. And that is how that trade panned out. All right, all right. 925 likes with the quickness. Thank you all. Thank you all. Let me make sure I didn't miss any comments. Fiends for Motion says I day trade and swing trade, just wondering what those numbers are. Oh, so those numbers, Fiends for Motion, those were the strat numbers. So that goes to a trading strategy. These numbers that you see right here on the bottom of each candle, they are from a trading strategy or a trading methodology called the strat. And it was created by Rob Smith, who unfortunately passed away last year. But it really does help give a lot of beginning traders or traders of any level a nice standpoint of how you should enter and exit trades. So it really did help me out, build up my consistency and my confidence on knowing where to enter. But there are some downsides to the strat, and of course, there's plenty of benefits. But I no longer use it. There are a lot of strat patterns that you can look up. If you want me to pull up the strat patterns just to give a little bit of information, Fiends for Smooth, I think that's your name. Just let me know. Let me know in the chat, and I can pull it up. Yo, Alex Dixon, thank you for the follow. I appreciate that in a major way. But yeah, so that's what these numbers under the candlesticks represent. They're just a strat. There's plenty of strat indicators. I use the one that's called the Strat Assistant. But like I said, I don't trade the strat anymore. I just keep it on my chart just to pay homage. You know, you never want to forget where you came from. All right, big shout out to Q Ma Dukes for sharing the live. Miguel Reyes wants to take a look at LLY. Already says nice trade, bro. I appreciate that. Again, a big shout out to Alex for the follow. Yo, Skylar, thanks for coming through. We're rocking pretty strong. Jonathan Tabrizi says, I've been trading as a scalper for 30 years. That's what's up, man. We got to tap in. You got to hop on the live. We got to do an interview to see what has scalping been like for the past 3 decades. Like, what changes have you seen? Has scalping been the same since you started? Has it gotten even faster? Has it gotten more challenging? Definitely want to understand and get your insights. All right, all right. So let me see up in here. Alex Dixon says, explain the ideas of the strat you use now. All right, cool. If you say the strats, oh, the strats I use now, the strategy I use now, yeah, for sure. We can get into that. But I want to kind of go in order. Miguel Reyes says, why did it crash? Not quite a crash, just more of a correction or a pullback. We are at the all-time highs overall for the market. So any day now, we're expecting some type of a correction or a pullback, right? You know, it's just, it can't be bullish forever. Now, it goes to an old phrase or saying that says, the market can be illogical longer than you can be logical. Basically, meaning the market can run in one direction a lot longer than you have money for it to not run in that direction, if that makes sense. Big thank you for the follow, Just. But all right, I want to go in order. The first question that we had was about LLY, and then we'll get into the rest of these questions about why there was a correction today, things of that nature. But let's go take a look at LLY and take care of who was that asked. That was where was it? Where was it? Where was it? Who asked for LLY? Miguel Reyes. Yo, Miguel, if you're still in the chat or if you're still in the audience, give me a thumbs up or something, my guy. Yes, indeed. So we want to take a look at LLY. So I will say this before we even get to a chart for LLY, Eli Lilly. It's definitely a company that I've greatly been considering adding into my long-term portfolio. I should have followed my first mind and got in right away when I was debating adding LLY versus AbbVie. Right now, Eli Lilly is over $900 a share, and when I was looking at it, it was at the 770s. So definitely would be up a nice like 20% profit right now. But let's go ahead and bring this over so we can see the pricing as well. Now, what I like to do, because somebody also asked to basically go over my strategies with trading, which I don't mind doing. I really, really do enjoy that. So what I'm going to do is basically show y'all how I would attempt to look for my setup based on LLY right now. But what I will do is go ahead and turn off that strat assistant. And what we see here is of just like QQQ, LLY had a gap down and an overall bearish day. And so we also have this indicator on, which is the wedge maker. Now, what the wedge maker does is it basically finds a broadening formation or a parallel channel for the pricing on where price is traveling. So we're currently on the daily chart, meaning that each one of these candlesticks represents one day. And the wedge maker shows us that price has been kind of traveling in this broadening formation or parallel channel, if you will. Now, as of lately, I really don't use the wedge maker anymore. I like to do my own charting. So I'm going to turn that indicator off. And the step one in my strategy, step one is to find a very obvious trend, right? So before today, what my eyes would have picked up on is this very obvious upward trend on the daily chart that we see for Eli Lilly or ticker symbol LLY. That's Larry Yellow. All right. So what I do is I draw either a broadening formation or a parallel channel like we see here whenever I see something very obvious. Now, I start off on the daily chart, right? I start off on the daily chart. I draw this very rough kind of trend lines here, the top and the bottom, and then I bring it down to the 30-minute chart and I just tighten it up a bit. I just tighten it up a bit here. It's already pretty good. That was a pretty good drawing on my part for the daily. Go ahead and pat myself on the back if I don't say so myself. All right. So you just come to that 30-minute chart or any time frame under the daily chart that works for you. So if you like the 4 hour and you're more of a day trader, if you like the 1 hour, whatever the case may be, any time frame under the daily after you draw that initial parallel channel or that broadening formation, you just want to go down in time frame and tighten it back up so you can see where the potential bounces are. Like I said, so if you're with me, if you're rocking with me in the chat, give me a thumbs up in the chat, right? So step one, go to the daily time frame, identify a very obvious trend, and then draw your top trend line and your bottom trend line. They're going to act as resistance and support. That's the first things that you want to do. After you draw it on the daily time frame, then you want to go to a lower time frame and draw the trend lines from there just to tighten it up. So before today, because we're going to get to today, y'all just rock with me, just bear with me. Before today, these would be some key areas. Any bounces off those support and resistance levels would tell me where to go ahead and enter my play, whether it's calls to the upside, like we see over here back at the beginning of July, or if it's pushed to the downside, like we see over here, July 10th, right? We're just looking for touches on that line to tell us where to go. Boom, simple and plain. We're basically just drawing diagonal support and resistance. Now, for today, once price breaks out of the trend line that we have, you now look for a continuation into that direction. So normally, and yesterday ended up perfect. This is part of the reason why I don't like to swing trade, or I'm not a big swing trader and I'm trying to get better at it. But yesterday, towards the end of the day, because like I said, I'm more of a scalper, right? So here we got these 30-minute candles. Right here, I might have got in for calls and then got out before the day ended, because once this trend is broken, which we see broken in the pre-market, then we know that we're going to have a start of a reversal or a move to the other side. And that's what we saw today with Eli Lilly, right? We had a break of the trend, and now the bears or the sellers, or really the market makers, really, I want to come up with a different term, because at the end of the day, right, we all know that it's the market makers that are moving, shifting, and pushing everything. It's not even necessarily bears or bulls. That might describe the overall market maker sentiment, right? The market makers are bearish today or they're bullish today. But we all know that it's not the retail traders like us that's pushing price. So I say that to say, once the market makers decided to break below this trend line, we knew that it was going to be somewhat an overall bearish day, which it was. Then the next thing you could do to confirm your overall bearish day is to look for your opening range breakout, which is the same thing I did with QQQ. So I hope that gives a little bit of rationale as to why things were bearish today. I know it's not the most insightful, advanced, secret sauce ICT type of information. It's very simple and straightforward, but I keep it simple and I keep it straightforward because I've noticed that the more simple my trading is, the more profitable, the more consistently profitable I am. All right. Let me see. All right, let me make sure I didn't miss any comments. I got thumbs up. Money Bounty says, what did you trade today? I traded QQQ. So Money Bounty, if you want me to go over that QQQ trade, just let me know in the chat. I did it at the beginning, but I don't mind doing it again. Artie says, what time trade for swing traders? What time frame for swing traders? Now, every now and then when I do find a swing trade for my community, yo, he, him, and his, thank you for the follow. I appreciate that. With the Thomas Shelby Peaky Blinders. All right. Big shout out to you. Thank you for the follow. All right. We got 1.5K likes. I can dig that. Thank y'all for running it up. That means a lot. But let's get into that question. I want to make sure I didn't miss anybody. So y'all just bear with me. Artie says, what time frame for swing traders? So when I'm specifically looking for a swing trade play or a swing trade setup for my community, I'm more of a day trader, more of a scalper. I always start, no matter what it is, whether I'm looking for a scalp or I'm looking for a swing trade, I always start off on the daily time frame. I feel like the daily time frame is the golden spot for whether or not you want to go left or right, right? Whether you want to go to a shorter time frame for scalping or day trading, start off with the daily, or if you're looking for a potential swing trade, start off the daily and work your way up. So when it comes to me and it comes to my swing trades, I go daily and weekly. That's it for me for the most part. I really don't go monthly. If I'm looking at monthly candlesticks, then I got to be prepared to hold that trade for, darn near a year or something like that, if that makes sense. It doesn't mean just because I'm looking at the monthly time frame that I'm going to trade it in less than a month. It typically indicates for me in my style of trading that if I'm looking at monthly candlesticks, then I'm in the mind frame of holding it for 4 months, 5 months, 6 months. But I want to show you the last kind of like swing trade play that was pretty dope that I put into my community. All right. Let me go ahead and let's close a couple of these. We want to look at, and it's been a minute. So let me go. So one that was really dope, and it has been a second, is HD Home Depot. Now I want to show y'all specifically because I already asked the question, right? What time frame for swing trades? Now let me just give a shout out to who's been rocking. Artie, Tyler, oh my boy Toki Frank is in the building, and Sadidi Des. What's going on? I think Sadidi Des is a little bit new, so thank you for coming through and rocking with us today. I'm Curtis G, and if you don't know, my TikTok live is all about beginning options traders and just kind of keeping the whole trading process as simple as possible. But here we have Home Depot. And I think the best way for me to do it is to go back into the actual Discord so I could show y'all. So let me go back and show y'all on the Discord. But this was the trade of the day. QQQ puts. I was in and out in a few minutes, took my profits and was done. But we want to go to the trading chat room in the Discord and let's go back. So like I said, I really take a lot of pride and putting my charts in before the market opens. I give a heads up as to what I'm looking at, and then we go from there. But we want to go back to, where's it at? Where's it at? Because Artie wants to know the time frame for swing trades. I would do a search for Home Depot, but the indexing in Discord hasn't completed yet, and it takes forever for it to short. Let me just double check. Let's see. Let's see if it'll work for us. Um, no, nope. Yeah, where is it at? All right, that's hood. Y'all rock with me. We're gonna go through and find those Home Depots. It's been a minute. But as y'all can see, my strategy is the same, right? You can see every time I draw a parallel channel. So I'm going to just recap it really quick if you guys want to know the strategy that I used. I start off on the daily time frame. I draw a parallel channel or broadening formation like we can see here, right? If it's a very clear, obvious direction. And then once I've drew out that top trend line and the bottom trend line, that just lets me know where I want to enter for my calls to the upside or my puts to the downside. Once we got a touch on the lines, that's the longest short of it. And then if you need an extra confirmation on whether or not you should enter, you could use like a candlestick pattern or something like that. But I want to find the Home Depot one because that was just so beautiful. Again, you guys can see it right here. So on June 12th, I said I got my eyes on Amazon for a potential quick scalp. I drew out on the daily time frame first, right here at the top. I drew out what it looked like, and then I broke it down to the 30-minute time frame, and that just told me where I needed to be. Boom, just like that. Now, of course, no strategy is perfect. There are some times where you're gonna have a breakout, like we saw today with Eli Lilly, but for the most part, that just gives me a good guide. I might have passed it. Let's see. I can't recall how long ago that HD trade was. Was that already in May? Was that May? All right, here we go. I found them. Sitting on these HD comms for the swing. Where is it at? Jeez, it's been a minute. Here we go. So, Artie, are you still in the building? Artie, give me a thumbs up if you're still rocking with me. If you're still in here, Artie, are you still in here? We got 5 new messages. Larger time frames hold more weight for overall direction. That's right. Toki Frank, go to back to work, but bro, keep it up. I appreciate you, my guy. User 315-271114117. Do you trade options? I have some questions. Yes, indeed. I do trade options. My TikTok live is all about options trading for beginners. Artie still in the building. So this is the perfect one that I wanted to show you, Artie. This was the Home Depot one that we charted out, which was beautiful. And this was from a member in my Discord community. So I can't take credit for it. I just helped him do the charting, but he was the one who found the overall play. So here we are. This was the charting for Home Depot. Let me move myself out the way. As we can see, let's move this over a little bit. All right. So this, like I said, I like to start off on the daily time frame. We just had a comment from a user in the audience that, of course, the longer time frames have more weight, and that's very true. But for me, my sweet spot is to start off on the daily and work my way up if I'm looking for a swing, or start off on the daily and work my way down if I'm looking for a day trade or a scalp. Now, here we had the daily time frame for Home Depot. I charted out first what I believe to be a support and resistance that went back a long time, right? We saw that price kind of got into this area and either bounces off of it or came down here and used it as support. And then the number one thing that I like to do, as you heard me say a couple times before already, is that I want to see, when was this? Because I want to go back to the live chart. This is just a screenshot. But essentially, the one thing that I want to see is a very obvious trend starting to form. And what we see way over here, I know it's kind of hard to see, but if you zoom in on the right-hand side, we see 2 bullish candlesticks back to back on the daily chart. So that's why I have this line drawn right here, because we're starting this uptrend out of the support and resistance zone. Out of this support zone, it's looking like we're going to bounce out of it. Then the third thing that really helped us, so right, we've got our support and resistance charted. That's where price is at. We've got 2 back-to-back daily bullish candles in the same direction. Nice. And then the third thing that really led me to this was these gaps to the upside that Home Depot needed to fill. So if I look at this, when I put this in here, this was June 6th of 2024. So we can go back to this live chart and see where June 6th is at for Home Depot. You guys saw it. I need to show you the screenshot of when I got in. I had already cleared out this, but it was right here. We saw those 2. Is this June 6th? Right in here. So we see those 2 bullish candlesticks. We had somewhat of a gap down. And then look at how Home Depot just came up. And remember, if you're at the beginning of my live, remember I said the gaps kind of represent an area where price doesn't want to be. So we had a nice jump up. Those call contracts paid good. And I ended up getting out conservatively. You guys know me. I'm conservative. I don't need to be greedy. So I got out a little prematurely because, look, price still continued to move up. Then we had somewhat of a pullback down, and then Home Depot continued to rise. But I'm very conservative, and I just wanted to show Artie that. So like I said, I hope I answered your question. Just for me, I start off on the daily time frame, and then you can work your way up to the weekly to see if you see any confluences, if you see any trends, anything like that. But for me, my sweet spot is daily and go down or daily and go up. All right. Let me see. But sure, I appreciate you, bro. Thanks, Artie. Want to make sure I didn't miss any comments. User 315-271-111-40117. If you got those questions, drop them. All right. They say, let's say the stock price is $30. Why would I buy a call option at 35 and not 25? It's just a matter of how much you can afford. So in your example, the $25 call contracts are going to be in what they call in the money. You probably already know that. That means that the strike price that you're buying is already the underlying stock price, right? Is already past that. So you're in the money. But in the money call contracts are more expensive. And so typically for a lot of beginning traders or small account traders, it's a lot harder to afford those in the money contracts as opposed to getting them out of the money. Now, the way I like to think about in the money versus out of the money is like when you go to the beach, right? Now, when you first get to the beach and you're in the sand, the ocean waves really don't impact you, right? When you're in the sand, far away from the water, the ocean waves really don't impact you. That's an out of the money contract. The closer you get to the water, the closer you get to the ocean, the more the water impacts you and it moves you. That's being in the money. So the more you're in the money, the more profitable or more the value your contracts will move. The further you are away from the water or out of the money, the less the move of the stock price is going to impact you. But the only downside is typically contracts that are in the money are more expensive. And so usually if you're a small account trader, we like to gravitate towards things, or small account traders, not necessarily me, like to gravitate towards contracts that are out of the money because they're more affordable. But at the same time, they have less of an impact on your contracts or the value of your contracts unless price moves in your direction very fast and a lot, right? So I hope that makes sense. And then you also say, wouldn't I instantly be making money if I buy a call at $25 because the stock is 30? That's only if the price of the stock continues to move in your direction. So in this moment, let's just say you buy call contracts for that stock that is has a strike price of $25, but the stock is already at 30. And let's just say you pay, you know, $100 for the call contract. Well, if it goes from 30 to 29.50 to $29, the value of your $25 calls is going to go down too. So it isn't just because you buy them in the money that you're automatically going to make money. Is from that moment in time when you buy your contracts, when you enter that trade, however much you paid, you still need price to go in your direction for you to make money. Think about the real estate market right now. Just because the real estate market is super hot, it's crazy, especially if you live in California or New York or any place like that. If I buy a house right now for 800,000 or $900,000, just because the real estate market is hot doesn't mean I'm instantly going to make money. I need it to get hotter. I need it to be scorching because I didn't already bought in at the top. So I still need the bullish market to continue for the price to move up so I can profit. So I hope that makes sense. And then Artie says they also lose faster. They lose value faster out of the money. That's right. Big shout out to QMod Dukes running up those likes. I appreciate it. And want to spotlight what Artie just said. So if you buy out of the money contracts, they are going to lose value faster. Now, I'm going to be real with y'all. My average trade is about 1,000. And I try to buy contracts as close to the money or in the money that I could afford. So let's look at today. Let's look at today as the actual example, right? Let's look at today. Like I said, my average trade is about 1,000. That's as much as my account size and as comfortable as I'm with trading right now. We'll go to my trade. I think today I spent a little bit more money than I'm used to, but today I spent about 1250 on the QQQ puts and about 5 contracts. Spent about 1250 on the QQQ puts with a 484 strike price, and the current price at that time was about 486. So you can see I was a little bit out of the money. I wasn't too far out of the money, but I was a little bit out because I was getting as much as I could afford with about 1,000, give or take, as close to the money as possible. So that's one of the components of how I trade. I try to get as close to the money or in the money with about 1,000. Now, the next component to that is I want to be able to buy multiple contracts. For the longest time, I was trading with one contract at a time, but then you don't have the ability to let a few runners run or to scale out of a trade. And so that's why I do like this mix and this balance of can I buy multiple contracts with 1,000 and how close or in the money can I get? Of course, user 315-27111-40117 says that really does help. I appreciate that for sure. Of course. And if you have any other questions, just hit me up in the DMs. I'm always happy to help, or drop a comment on one of my videos if you want me to explain something more thoroughly. Whatever I can do to give value, I really do enjoy doing that. All right, all right. So I appreciate y'all. Just wanted to tap in. I was on vacation for a little while, so I missed a couple weeks of going live. Now I'm back in the mix and I'm getting back to back with my lives again. And with that being said, you guys drop a follow, hit me up in the DMs, send me comments, send me questions so I can give you value, and we'll tap in again soon. All right, y'all. Peace.